Hey, welcome in. You're listening to the daily version of the Corlin Economics Report. I'm Al Corlin, and I appreciate you joining me. It is Tuesday, the 16th, if I'm not mistaken, and I know in that case I'm not, of August. This program is being produced exclusively for my friends at Kitco. What you heard last time we did this, you heard what James Turk had to say about the gold market. Now we're going to talk about what Big Al and Trader Rog think about the gold market. You know, as we're recording here, the Dow Jones Industrial Average, we're recording, by the way, at about 11, almost noon or so, Pacific Daylight Time. And the Dow is down about 100 points right now. It doesn't seem to know where it wants to go. Gold, on the other hand, is up a little bit. Gold actually is up $24.80 right now, 1782.80. The trend in gold has definitely been different from the trend in the conventional stock markets, in that the trend in gold is basically upward. No one can disagree with that, whereas there is the only trend I think that one could could ascertain, or one could define right now in the conventional markets, is there is a very, very lack of direction for lack of better terms. I mean, one day you're up 400 or 500, the next day you're down 500 or 600, the next day you're up 125. Today we're down 93.13. Whole bunch of confusion going on out there. Roger, what does this bode for the gold markets in your opinion?
Well, the gold markets are still pressured to the high side. At this time in the cycle, we're looking at an ABC correction, today being the C day. The C day is up, and normally it's within a trading range of the A and B. That is not true today. It's gone a lot higher. The trading range today is $26 on the December contract. The price as we speak is $17.85. The high today was $17.89.80. Call it $17.90. Volume is very good, 145,000 open interest, 364,000 contracts. That's on December. So it's up 1.5% today and looking very good. Now the September silver is doing something similar, not quite as powerful, but pretty close. Silver right now is trying to beat $40, which it can't, but it will probably just before or after Labor Day. Today's silver September contract, $39.83, up 1.3%. It opened a little higher at $39.94, hit a high of $40.18. You can write that one down. $40.18 on any dollar amount is a stop-and-go point for silver. So that was no surprise there. Also, the big news this week was the crazy trading in the Swiss franc, which went from 125 to 139. Now it's back at 126. That's making a lot of problems in Switzerland with everything being so expensive. But good, that's what happens when a currency is perceived to be the blue chip premium. Everybody's wanting to dump out of euros and U.S. dollars, so immediately they go to the franc. That's why that happened. Now, to answer your question about volatility, in our opinion, high-frequency trading by the hedge funds, where trades go on and off in milliseconds, was probably the reason why we had the crazy trading we did last week. There was news both positive and negative out of Europe. It was kind of like watching a soap opera, and it does continue. France and Germany are trying to come to a conclusion with the IMF and the central bankers there to try to figure out what in the world they're going to do to solve the European mess, which is extremely serious. There's no question about it. There is no good answer for them. The best answer, we think, would be for Germany to cut the string and let everybody go, take care of their own knitting. But if in fact they do that, you're going to see the euro crash and probably the United States global market system crash as well. So that's why everybody is so anxious, because it's all tied together and they don't know what to do.
Boy, it is all tied together right now, and people don't really seem to know what to do. I know that I personally, as you were discussing that there, I was looking at my portfolio, and I know the TSX, which is where most of the stocks that we are invested in trade, is down. But I have to say that virtually all of the stocks that Kathy and I have purchased, and that's close to a couple dozen of them over the last 6 to 8 months, or 6 to 12 months, I guess I should say, are in a profitable position. So I think the trend, I think the disparity, the disconnect between precious metals and precious metals stocks, I think is going to come to an end. Raj, I know you're off for Japan. You have a great time, and we're going to be back with you here on Kitco next week.